So I'm not creating any hope that we are going to break these above these levels, that is 18,360, 18,400 for after budget. As long as we are trading below the level of 17,800, I'm not going to be bullish. All right. So I'm expecting these budget hope rally should be limited to these region, that is the region of 17,800, 17,700. All right. So here what I'm expecting, this as a wave A, this as a wave B, and I'm expecting a C wave 1, 2, 3, 4, 5, which is a kind of impulsive wave and is will be clubbed with the budget session. So if we see any impulsive move, so I'm not saying that it is going to be a only C wave. It may be possible, can be impulsive starting of the impulsive price action for above level also, but we are not going to turn bullish as long as price action will not sustain above 17,800. So this is the resistance area, and if this resistance area work and we start see a lower low lower highs in the lower time frame, right? For example, in a 1 hour time frame, so we will say that this resistance is working. Okay, so as of now we are expecting a push, all right, on the upside, either for a correction or a starting of a impulse or new trend. Okay, so what we can expect, the major level should be this, that is 16,800, this zone. All right. So but for a conservative player, we should take this key level, okay, which is 17,077, which is the low of previous Friday. So we should create, or we should be in long side on the Nifty, okay, for upside targets of minimum target 70,500 and 70,650s. If we see something surprisingly into tomorrow's session, so we can cross this barrier. Okay, and the things will change with respect to the tomorrow's session. But we have to see something surprisingly in the budget for to break this level. Okay, so if we talk about the percentage move, let's say Nifty will close here today, that is the level of 17,400. So if we have to break this barrier, Nifty has to be bullish more than 2%. Okay, so we need a 2% move on the upside for to break this level. Okay, so if the budget rally gives us more than 2% rally, so we can expect that. And yes, the fashion should be impulsive. Okay, so in tomorrow's session, if we see a 2% move from this level, so we can think about the bullish possibilities we have discussed in the previous session, that it can be a starting of a 1 2 1 2 3 4 5. Okay, we will see how. But if we failed to cross this barrier, I'm not going to say that this is a bullish opportunity, and whatever the announcement should be in the budget should be avoided as per technical analysis. Okay, so the main level is 17,800. Let's repeat the previous session, what I have discussed in the previous session about the Nifty. Okay, so in the previous session we have talked about two possibilities. First is bullish and another is bearish. So you are seeing the bearish thing here. All right, so let me open the bullish alternate count. In the previous session I discussed that if we cross this zone like this, that is, this can be wave 1, this can be wave 2, and we cross above this level and sustain above this level, so we can say that the fall from the 18,350 zone was a second wave, and we were considering this as a completion of a wave 4 and this as a completion of wave 3. So this whole fall was a corrective, we know that, and this is an impulse 1 2 3 4 5. Either it is a wave 1 of a larger degree, wave 5, or it can be a truncated fifth. Truncated fifth means wave 5 fails to go above the level of wave 3. So if it is a truncated fifth, we have to see a impulsive fall. So this is looking like an impulsive fall. It can be impulsive fall. This move is also an impulsive. This move is also an impulsive. All right, you cannot deny. Nobody can deny that that both the falls are not looking like an impulsive, and both of them are corrective. Okay, so it can either it can be corrective, it can be impulsive fall, or it can be this can be impulse and this can be impulse. All right, depending on the how we count the wave. Okay, so I am counting with the help, I have both the uh, counts, but we are following our basic definition of the trend, that if the trend is making higher highs, higher lows, we are with the bullish opportunities. And if the prices are making lower highs, we will follow the bearish opportunities. So what is the bullish outlook? That this price action should be in an impulsive or should move above in an impulsive manner. Okay, so as of now, as far we have seen this as a temporary halt here, and then we fall back to the 60,830 zone, but failed to cross or close below this level, and again jumped and broken the previous highs. So this is if we see carefully from here, so we are making a higher high respect with respect to this highs, and we have again in today's session we have placed a low which is higher than this low. So we need to trade above this level, which is Friday's high. Okay. What is the level? That is the level of 17,376 or 75 zone. So we have to uh, trade above this level in today's session to make a buy position, to make a confident buy position that prices are making higher highs, higher lows in the lower time frame. I'm using 1 hour. So it is obvious that it is the basic definition that it is going up. Okay. So if we say that we have to create a buy position, just wait for a close above the level of 13,000, 17,000, 17,375, and just go long on the Nifty. And what should be your key level stop loss? This, which is the low of a previous session, which is 17,076. Okay, so this should be your stop loss. So you have a risk of this kind of, okay, in the Nifty. As long as Nifty is not closing below this level, you can go long. And what should be your target? As I said that if we are bullish, we are going to break this level in an impulsive manner, a surprisingly move. Okay, and we will sustain about this level in coming in this whole week. Okay, and the nature of the price action should be like 1, 2, 3, 4, 5. Like this will not be here we will see we will count then a wave 1 and this as a wave 2, and we will be having a wave 3, wave 4, wave 5. Okay, and for this wave 3 we are in a lower degree circle degree wave. This is wave 1, this is wave 2, and right now we are going to see a wave 3 of circle degree, and then we will see a wave 4 and wave 5, which will complete our wave 3 of this degree. Let me mark that level to avoid the confusion. Bullish opportunities will be wave 1, this is wave 2, maybe possible wave 3 will complete here, and then wave 4, and then wave 5. So this will complete your bullish outlook. Okay. And in this wave 3, we have circle degree orange wave count, wave 1, wave 2, and right now we are in a wave 3 of 3. So may possible tomorrow we can see a third of third, which is the strongest wave. If only if we are going to see a bullish sentiments. Okay, so this can be a wave third of third, so which will complete your third of third, then wave 4, and then wave 5. So you will see a completion of wave 3, and then wave a higher degree wave 4 and wave 5. So to complete the higher degree wave 3. Okay, or higher degree impulsive wave. So in this budget rally should cross the level of 18,350 if you are expecting this to go above the level of 18,600 and 19,000 for the rest of the months. Okay, so in this way we can say that this is how should be a bullish move in the Nifty. with respect to the budget. So tomorrow's session, if we close above the level of 17,375, go long for at least to these resistance zone, that is 17,500, 17,600 zone. This is the resistance zone because bulls have successfully hold the level of this zone, which is 17,000 and 16,800. So they have successfully hold this level. Okay, and if we get the closing above the level of 17,375, so bulls will again push. The next objective of the bulls will be here to reach this level, and then this will be a decisive region for the rest of the market trends. Okay, this bullish outlook is backed by this wave 4 WXY correction. Okay, so we were expecting the wave 4 is completed here, and this is wave 1, this is wave 2. Okay, and we are going in a wave 3. So this is the bullish outlook, and let us see the bearish outlook. What is that? Okay, so in the bearish outlook, what we are expecting that this is not a impulsive. The correction, the wave 4 correction is not ended here, and in the bearish outlook, what we were expecting that this is a part of wave 4, so it can be a wave A. So this is one outlook, that this is a wave A, this is wave B, and we are in a wave C. And wave C can be a one should be unfold in 1, 2, 3, 4, 5. Okay, so this is your wave 1. Okay, as of now, this is your wave 1 completed here, and in the budget rally, you will go here for a wave 2. Okay, in a 3-wave rise, and then you will see after budget a third wave, okay, which will break this level, that is 16,400. So this will break. Okay, and then you will see a wave 4, and there will be a wave 5, which will complete your C wave 1, 2, 3, 4, 5. As I said that every C wave will complete in an impulsive fashion, which is 1, 2, 3, 4, 5. So this can be anything. Okay, so this is wave 1, this is wave 2, and there will be wave 3, wave 4, wave 5. So this is a bearish outlook. But how we can say that and when we should go for this outlook? Let the market unfold to this level, because we are saying that we are moving in a wave 2. If we are considering the bearish opportunity, bearish outlook, so we are saying that we are in a wave 2, and the wave 2 retrace back to the 50% to 61.8%, and this is the Fibonacci level is coming here. So exact region which I am considering the decisive zone, which is 17,700 and 800 area, is falling in the wave 2 region for the bearish alternate count. Okay, so if we are rejecting from this level and we are making lower highs, and we break this level, which is 17,080, okay, then we will say that yes, we our bearish count is right, and we have to go short on the index Nifty for the lower level, and Nifty will break this level 16,400 and even 16,000 in the coming sessions. Okay, so I'm not saying that just create this position, let the market commit to you, and then you commit to the market. Okay, you do not jump here to create a sell position. Do not stand in front of this rally. It can be anything. It can be a sentimental impact. So wave 2, we know that wave 2 can be can go to the 99%, but not 100% of the wave 1. So if you are considering this as a wave 1, so wave 2 is open for the 99%. Okay, and tomorrow is a sentimental impact. It can be anything. Okay, so for tomorrow you have to go bullish for at least this region. Okay, and your stop loss is this. So your risk rewards is favoring to be bullish. Okay, so you can go bullish on the Nifty for with the stop loss of this, and for the target of zone, this is the minimum target zone. If you have a surprising announcement, you can break this level, and you will see a surprising move in the Nifty. Let's say 5% or 7% move. So we are expecting just 2% move in tomorrow's session. Okay, 2% or less than 2% move, because I'm considering the 2% from 70,400. Okay, so and from that level, I'm considering 2% move. So from the current level, I'm expecting a 1.5 to 2% move from the current level. Okay, So this is the idea that you go bullish with this particular trend, and do not jump here to create a sell position. Let the market unfolds, and let the market tell you that it is forming lower highs. It will fall here, it will go above, will fail to break this high, and whenever it this happens, whenever the market will break this level, just go short here if you want to go short. This will tell you that our outlook of this place of the bearish count is right. Okay, and the more confident opportunity will be below this level, 17,070 zone. Okay, so this is your more confident, and your whole structure of this if you are counting the bullish opportunity, your structure will invalidate, bullish opportunity will invalidate if the prices will start trading below 17,300. Okay, so this is your decisive level for this week. If the weekly closing is below 17,300, you just adopt this bearish outlook, and if the weekly closing is above the level of 17,800, you just adopt that impulsive bullish outlook. Okay, so this is about Nifty. Let us talk about the Bank Nifty. So in the Bank Nifty, again, as I said that prices are making a higher highs, higher lows, and if we talk about from the lower region, look at this. This is a high. This is a low, which is higher than this low, and then we have broken this high here. So we have a higher high and higher lows. Again, we have this. We have broken these highs, both these highs, and we have got this low. So this low is higher than these lows. Okay, again, this was from this rise we have broken this high, and we have got the low. Again, we have a new high, broken these highs. So we have higher highs, higher lows. We are aligned with the higher degree time frame. So the Bank Nifty also tells that it is aligning itself with the larger degree trend, which is higher highs, higher lows, and which is the basic definition of the trend, uptrend. Okay, so this is how you have to be in the bullish position in the Bank Nifty, because Bank Nifty is making higher highs, higher lows, and aligned with the higher degree time frame. So your key level will be this, the nearest low established point. The nearest established point is 37,000. So as long as Bank Nifty is above 37,000, you have to adopt the bullish opportunity and look for the target of this this highs, which is 38,850 zone, or 39,000, which is psychological level. So this is about Bank Nifty, and we have a idea posted here, which is head and shoulder continuation pattern. Look at this inverse head and shoulder. So this is your left shoulder, this is your head, this is your right shoulder, and we have got a breakout about the this neckline. This is your neckline. Okay, so we have got a breakout about the neckline, and we have got the retesting of this neckline, and we are successfully holding above the level of this neckline, and also the main important level, which is the right shoulder low. Okay, so this is your ideal stop loss is this right shoulder of your inverse head and shoulder. So this is your right SL. This will be your key level in the Bank Nifty. So in the Bank Nifty, if you are following the chart patterns, traditional conventional technical analysis, again your stop loss is this. If you are following the our wave analysis method, which is 1 2 1 2 3 4 5, so even then also you have to look for this, because if this is wave 1, this is wave 2, we are in a third wave, and a third wave which will be unfolding in as a wave 1, this is wave 2, and you will see a wave 3 in tomorrow's session. Okay,